For the first time this year, I have a chance to visit with Chris Swift of Swift Trading Incorporated. He's based in Nashville. He joins us right now. Chris, when we opened up the markets this morning, we had the grain markets surging higher right out of the gate. A lot of follow through apparently from the overnight trade, although things have really quieted down here. Let's take a look at this corn market right now. Currently, the March corn is higher, but only 2 3/4 cents higher at 4.86 3/4. Now 4.86 1/2, 2.5 cents higher now. We had a high overnight, in case you missed it, at 4.97 3/4. Got very, very close to $5, and now we're 11 cents off of that at the moment here. Corn market's starting to slide a little bit. Soybeans having stout gains right now, but off of its overnight highs too, significantly so. We have the March contract now at 13.31 3/4. Yeah, that's 20 3/4 cents higher, but boy, it's well off its high overnight of 13.49 1/2. We almost hit 13.5 bucks overnight. Didn't quite, came a couple ticks short, and now we backed off of that by over 17 cents now from that overnight high already. Still 21 cents higher. That's some amazing movement in the soybeans. Wheat in Chicago, March now down a penny at 6.39 1/2, so it's starting to get weak in the knees here, and we had a high overnight of 6.5 bucks, 6.50 1/4 to be exact in Chicago March, and now we're under 6.40, so we are now currently down a penny on the day. The March Kansas City wheat down 3/4 at 6.02 3/4. July, though, the new crop month, is actually up a half cent right now. In the spring wheat trade, we had the March contract 6 higher at 6.05 1/4. And that's within, about 2.5 cents of our high of the overnight trade. So, Chris, what do you make of this here so far? Big surge early, sliding a bit now. Do you think it'll get traction or not?
By the end of the week, probably so. That was an awfully big move for a Sunday night to come in and have an excessive follow-through this morning, but there's nothing really that has changed. We believe that the exports are going to be continually phenomenal for the next several weeks in a row. The wheat market, probably the most iffy as we go back and forth to any kind of weather that comes in through the wheat belt or through the Midwest right now. So I can see it not holding as strong as what the corn and beans are.
So when you look at the soybeans, for example, let's take a look at the new crop November contract here. For the next new crop, let's go out a year here. Even that is priced at 11.37. You have these nearby contracts up there over 13.30 right now. So it's about a $2 discount for this coming year. But, gosh, you can go all the way out. I just randomly selected something way out. This is November of 2014, and it's at 10.03 3/4. That's like 4 years out, and you could still get over $10. Chris, is that something farmers should be looking at right now?
Marlin, I'm going to be hesitant to say, because that's a long time out to project of whatever the soybean demands are going to be or the abilities to continue to grow in our crop production. So I'm probably going to avoid that one going that far out. But just looking at this coming November, here at 11, we've still got the entire U.S. planting season to go through. So even if we top, I don't think it'll be the top, and we may have to go through several weeks or months of sideways trading until we get the U.S. crop more definitively either in the ground or in a growing aspect.
It's quite a difference from the nearby March contract here at 13.31, but both of them have a steep gain all across the 6-month chart. All right, Chris, we'll come back here in a moment, and I can't wait to get your thoughts on what's going on in our cattle market action. We'll talk about that along with the hogs when we come back. Live cattle trade, let's take a look at what the futures are doing right now. And with these live quotes provided by Bar Chart, we have February live cattle down $1.35. We're at 113.67. The April contract really getting soft here. We are down $1.45 now at 117.80 after a high right at the open of 119.50. So that means we've come off of that by about $1.70 now so far. Quite a turnaround here in the cattle. Of course, you would imagine the feed grain rally has something to do with that. January feeders down $1.77. We're at 137.17 right now. The March contract over $2 lower. Whoops, it just updated. Now 157 lower at 138.65. So that was probably a glitch in the system. There you go, down $1.57 here at 138. $1.05, and now it shows it's down $2 again. So I don't know. What are you showing there, Chris? Are we still flirting with this $2 drop in feeders?
Oh, we are. We're 138.02 down 220 last on the mark.
Okay.
But boy, these feed costs are really starting to hurt in on cattle feeders now. The input cost, and we've not seen any break in the cash feeder cattle market. So these next 2 weeks coming up is going to be very, very interesting to see how cattlemen react going into the sale barn. Are they going to be as adamant to bid up for that inventory with corn sitting there breaching $5 a bushel, or are they going to be holding back just a little bit more reserve and seeing if they can't bid a little bit lower for that feeder cattle?
So when you look at March feeders on a chart, considering the pressure from the feed grains right now, do you think that they have more weakness to come, or do you think they'll pull through this fairly unscathed here?
I think they're going to probably soften up. That index is hovering just over 138. If it were to just drop $5 or $6, that would not be out of the ordinary whatsoever. But that would begin to put futures down around 134 to 132. And I had looked, there's a really significant low around November the 20th. So if listeners want to look at that November 20th low, I think that'd be a really good aspect to kind of figure this is where prices may come back down to.
And the cash cattle trade last week looked like it was around 111 to wrap up the week. Do you think that'll change much?
Yeah, 111, 112, and the December went off the board right at, I think, 112.50. So it was in line with expectations for the delivery process. But I'm not real sure. I don't see any real need for the packer to have to aggressively go out and bid up for cattle. I noticed that in the grocery store, ribeye steaks were $12.99 and $13.99 a pound, respectively. The loin prices had gone back up again. So with all the holiday features over with, knowing we got a bunch of credit card bills coming in, I just can't imagine the packer being very aggressive towards wanting to bid up for inventory.
And checking the lean hog trade right now, everything higher, leading the February contract up 71.40 for the last trade there. That's up $1.12 on the day, about 60 cents off our earlier high. However, after hitting a low of 70.67, it's bounced off of that already by about 70 or 75 cents. So fairly strong performance being turned in here by the lean hog so far. As I mentioned, nearby is leading the way. Good to talk with you, Chris. Happy New Year to you. We'll talk with you again soon. Chris Swift of Swift Trading Incorporated. He's based in Nashville. Janet, we're well on our way into our first trading session.
Right.